Welcome to Prime Life. We call it Retirement 2.0. Leave each episode with tips and new ideas to help you navigate retirement in our new age. It's your time. Make it count.
This podcast is for educational purposes only. It is not intended as medical, investment, or financial advice. We do not sponsor or endorse any of the individuals, companies, products, or services featured on this podcast. Any statements or opinions expressed are of the individual who makes them. We hope you enjoy the episode.
Hello, everyone. This is Joseph Katz, and welcome to another episode of the Prime Life podcast. Mary, it's been a few weeks since we recorded. How you doing?
I'm doing great. It has been a few weeks, and I've been thinking a lot about you. I'm like, where's Joseph? What's he been up to? I'm hoping to hear some exciting news or something that you've been up to that you can share with our audience.
I wish life was that interesting. Why don't we jump into our show? I know we have exciting guests as always, so why don't you do the honors?
Yes, today we have Jeremy Reif. He's the owner and founder of Point Wealth LLC. He's an author of Living the Retirement Dream. This is so perfect for our Prime Life podcast. Jeremy, welcome to Prime Life. And please tell us a little bit about yourself and a little bit about, why you wrote a book.
Yeah, thanks for having me. I guess my name is Jeremy Reif, and, I've been in the industry for over 20 years, and I have 3 young children, 3 boys and a wife. We like to travel and get around, but as you can see in the picture behind me, I'm from Wisconsin. I'm proud of it. Background in dairy. But again, I like to travel a little bit, but my real passion is in finance. And oftentimes, as I'm doing financial planning and asset management for my clients, I always get asked a handful of questions over and over. And so I'm like, well, if I keep getting asked that, I should find a way to get that out there. And so I wrote a book, and compliance kind of chopped it down a little bit, but it really is more about some of the most common questions and things that people go through throughout retirement that they should be focused on, and how to answer those questions. It just gives a little insight to that personal experience.
It's a great jumping off point. So what is the biggest top number one answer on the board question?
The biggest question that I get asked all the time: what is the biggest mistake that retirees make? And, the media blows things out of proportion, and you see commercials on TV saying, like people carrying around a number saying, this is my number or my nest egg that I should be focused on. And really people end up focusing on the wrong thing. They focus on that number instead of focusing on what's truly important. And as I said, family is really one of my number one things, most important to me. Well, what are they going to do once they get to retirement? Yes, you need the money to get there, but what are you going to do once you're there? Are you going to spend time traveling? What happens when you have 2 people, spouses that are working all the time, and then they're spending time away from each other, and then all of a sudden they have to spend time together again? Sometimes it's scary, but
the horror.
So it's like, what are you going to do with that time? How are you guys going to function together? And do they have kind of a plan? What I hear all the time is, I'm going to golf. The husband or wife will say, I'm going to just golf. And then the second part of it is, I want to spend time with the grandkids. And then they're kind of not talking to each other, which becomes a scary component. And so, yes, money's important. Don't get me wrong, but it's, what are you going to do with your time? How, what hobbies do you have? Things like that.
I would agree. I think we've had many guests on our show, and they've talked about really what you've talked about. And I think at the end of the day, community and the people that we love, is most important. So how do we envision, our life with that? And yes, you could have 2 people that have been together for quite some time, and yet they maybe haven't even sat down to talk about the very different views of what that may look like. So I do appreciate that. What do you believe has perhaps changed maybe in the last 5 or 10 years as individuals think about the retirement journey. I would love to hear a little bit about.
And we'll get that answer after a brief word from our commercial sponsors.
NASA is always working harder to be your carrier of choice. We offer insurance products that can help you meet your retirement goals, such as protecting your savings, securing lifetime income, or paying for healthcare costs. We're dedicated to providing best-in-class service and are keeping things simple, and we'll have your back. We have around 400,000 policyholders and contract holders and have been doing this for a long time, 170 years. But we remain humble enough to always try to improve. For more information, visit nfg.com. NASA insurance products are issued by Nassau Life and Annuity Company of Hartford, Connecticut, Nassau Life Insurance Company, East Greenbush, New York, or Nassau Life Insurance Company of Kansas, Overland Park, Kansas. Subsidiaries of Nassau Financial Group. Products are not available in all areas. Policyholder counts are for all Nassau companies as of September 30th, 2022, and are subject to change.
Yeah, the retirement journey, I think, has changed since COVID. People kind of get a glimpse of retirement by having to work from home. And so they get a taste of it and they're like, how do I retire earlier? I can do this job from anywhere in the country. And that's what they're like, maybe I could be a snowbird and go from, or from Wisconsin or from where you guys are, go from up north down south somewhere. So, I can take my computer, my laptop with me. And, as long as I don't have to physically be somewhere for an actual meeting, that they can do stuff. So it's coming to how can I retire sooner? I've seen the devastating effects of people getting sick and not being able, I save all this money. What am I going to do with it if I can't spend it? That's the biggest thing I've seen.
So I'm going to tap onto that healthcare piece in a quick second. But somewhere when I was poking around your various social media sites and website, you had something about taxes. And obviously taxes is a big part of planning. So maybe there's a thought you could share about, tax planning as it relates to retirement, but also, and maybe this is two separate questions, so feel free to chop them up and tell me, answer the next one in a little bit. But you mentioned the healthcare. So healthcare is a huge expense as we get older. We need more healthcare. We use more healthcare. The cost of healthcare goes up, and so on and so forth. So maybe you can talk a little bit about both those items and how people should be thinking about them.
Okay. Maybe I will split it into two, but maybe, I know there's some listeners out there, but we're also recording a video session as well. And so maybe a visual might help with this. And so I'll start with and say you're working and this $10 bill is going to represent, your income. And while we're working, we have taxes that are associated with it. And so everybody feels the pain up front. We have to pay federal taxes, so if you earn a good decent amount of income, you have to pay federal taxes. Depending on what state you live in, you have to pay state taxes. And then the government also says, wait a minute, we didn't get enough. We have to pay for Social Security or FICA tax. Then you have Medicare tax, which is for the healthcare part of it. And so while you're working, you probably lose a third of it right off the top. And so you're left with this to support your lifestyle.
You just violated the law.
Will I go to prison?
I'm just kidding.
Well, maybe if we tape this back together, we can still spend it. I'm sure the bank will take it, right?
I'm kidding. Sorry.
Yeah. So now we have this that's left and we say, okay, well, I need to pay my bills and I need to also save for retirement. And so over time, you'd say, well, I already got violated. They took a third of my money for taxes when I earned it. I need to save as much as I can. And so we put it into tax deferred vehicles. And up until 1996 or 1998, you couldn't put money into a Roth or tax free. So that was, tax deferred vehicle. If you didn't want to pay any more taxes, was the place to be. And retirement plans at work, you couldn't add money into a Roth until like 2006. And that's if the plan updated their bylaws to even accept it. Some plans were much later than that. But, so most people, especially for like this episode, for the, people that listen for this podcast, they deferred their money. They put it into a retirement account that was a traditional 401k or 403b, all the different deferred vehicles, or a traditional IRA, so they didn't have to pay more tax. But once we get to retirement, say, well, I would like money to live on. And so I, again, have to pay taxes. Well, if you take out too much, the federal taxes go up. Depending on what state you live in, your taxes probably also go up. But, so you get taxed again on this money. And so I'm just going to take a little bit more off the top and say, well, you're left with this. And at the end of the day, a lot of my clients are passionate about family, right? And I would like to pass as much as I can to my kids. Well, the government, they're around indefinitely. And they say, you know what? Pay taxes just as you take it out, but I'll let you pass it to your spouse tax-free. Oh, what a great deal, right? Well, what happens is instead of married filing joint, you then end up paying more taxes because you still need the same amount to live, maybe a little less in groceries, but, your property taxes aren't going to go down because spouse passed away, so a lot of your expenses stay relatively the same. It's just very few goes, so you get taxed again on that money. And then what you have left to give to the kids, there's a thing, like after the second spouse passes away, there's a thing called income respective decedents or inheritance tax. They take even more. And so all that money you saved and worked so hard for, they take so much away from you. And people don't realize taxes end up becoming one of the most expensive things during retirement. And they should be so focused on that, but they don't. They're like, well, I'll just pay them as they each and every year. They don't pre-plan anything. And for those that don't pre-plan, they end up paying more than what they have to, or, the kids get less, or, so when the kids get it, they're like, well, mom and dad just didn't do a good job planning. We'll have to pay the tax now. It's just, so that's the tax question. Is I think that is the most important thing that retirees face, but they don't know about, is taxes. And that becomes, for a lot of my clients, one of the biggest things that we work on. And we save clients thousands, hundreds of thousands of dollars, depending on how much they've actually saved. The more you save, the more taxes you can save then too. You want me to jump into the healthcare one, or do you?
Oh, yeah. If you just tap on, for a minute, just touch on that, because I think, taxes is such a large part of it, but healthcare is also a huge part of retirement expenses.
Yeah. So out of part of those taxes, we set aside a little portion for healthcare, but obviously healthcare is in trouble. The cost of medical care has been going up. And if somebody wants to retire early, you'd say, well, Cobra insurance only covers for 18 months. How do I retire at 55, for example? Unless if your company provides a plan that will carry forward. Most companies have gone away with those types of plans. So you're then stuck with the open healthcare. But as I just said in the tax segment, the more money you draw, the more taxes you pay, you're going to end up with a lower subsidy or pay the full premium for open healthcare. And that's where people are like, I can't retire early because it costs too much. Well, if people would utilize something that there's one thing that is triple tax exempt, which is a health savings account. And most people, they say, well, they confuse that with like a flex spending account. It's a use it or lose it. Health savings account is going to be an important tool for people that want to retire early. Say you can't use that money to pay the healthcare premium, but you can use it to pay the deductible. So that way you can find a plan, even though there might be a $8,000 or $10,000 deductible, if you had a pile of cash squirreled away to pay that, it makes it more affordable, a way to get there sooner. The other thing that we a lot of times like to plan for is if we can use tax-free items like Roths or set aside money in a savings or checking account, we find a way to bridge the gap, saying, how many years are we going to have to pay for health insurance? if we have money in cash, that doesn't count as a penalty for income for healthcare premiums. If we have money coming from a Roth, it doesn't count towards healthcare premiums. So we find ways to shift money to an area that is more favorable to get people retired early and able to pay for those premiums.
Jeremy, do you find that individuals, when they come to you, how do you work with them in terms of like, you're getting individuals to really kind of comfortably share with you what they don't know. And I know, that can be very intimidating and also overwhelming to say like, okay, well, like even the things you just shared with our audience, like there's some people that they don't know that. Like the saying is, you don't know what you don't know. So how do you kind of gently start these conversations with individuals to kind of have them feel like it's not too late and we can meet you where you are?
Great question. Actually, when I started my company, that was one of the things that I looked into, before I was all gray. Everyone's like, what experience do you have? Prove to me, so it was more about, I tried to create more of a family style instead of the traditional conference room with chairs, intimidating. I don't dress in suit and tie or three-piece. That has gone away. And I'm more relaxed now than ever. And my clients, I think, appreciate that. But I have a couch so clients can sit back and relax. I have a TV, a beverage center, but it's meant to have more of a relaxed environment. Not only that, so that helps facilitate some of the conversations. But the next part is, I actually listen. I sit back and ask a question, and kind of like how you guys are right now. You're asking a question and then I'm doing a lot of the talking, but normally the roles are reversed. I'm asking the question and it's usually about them. What is important to them? Is it family? Is it, and a lot of times we start talking about stories and, kids or grandkids or whatever is important to them. And that is the area of most importance, to find out about them. And then I kind of back into, okay, well, yes, the numbers help me with some of these things, but it really comes down to everything that I do is personalized and customized to my clients that I'm dealing with, because, you're right. It's tough to talk to a stranger and say, here it is. People just aren't that willing to open up about that kind of stuff. We got to have that trust level there.
We started this conversation almost making an assumption people have done some form of planning or have some nest egg of assets that they've put aside. I've asked this question of other folks on the show. When should they start doing it? Is it too late? Like, I'm sure people need to hear this over and over again. It's human nature, right? At some point it'll click. So what should they do? Like if I didn't do anything, or maybe I've done something but not enough, like what's the suggestion?
Well, first thing is, it's never too late. I mean, a lot of times people are like, you know what, whatever I'm earning, I'm spending because cost of goods have gone up. I need a car to get back and forth to work. It's priority levels. And so usually the most money is put away after kids are out of the house. The cost maybe of food or something might have dropped a little bit. And after like a mortgage or house payment has dropped. And people's biggest savings up until that point are because they had to systematically do it. You systematically pay your mortgage. And so if you can systematically put money away and not worry about, like I learned to live without, whatever your mortgage balance, amount each month. Well, once that's paid off, can you just start putting it away, or a part of it anyways, and start systematically saving? And that's how people get there the quickest, is they're able to systematically put money away. And usually 401ks are great for this, because usually they say, well, we'll have a participation, if you put away 4%, we'll match 4%. Well, that's free money. So usually people are doing the minimum, but then after, some major event, something is paid off, a lot of times then they really start putting a ton of money away, and it's never too late. So I guess that's the biggest takeaway is do it when you can, as much as you can, but it's okay if you have to do it late, but putting some away is better than putting none away.
Yeah. I appreciate that. I think that's a great perspective. And I love that, again, you're meeting people where they are and you're not, admonishing them. And you're, like you said, if you haven't started, here's an opportunity. And I also liked that you talked about that systematic, so my question really kind of follows that. So how would an individual, optimize retirement income sources or just, the retirement savings in general? Like you talked about, systematically doing something. Are there any other tips that you can offer, Jeremy?
Yeah. I mean, I guess to me, when I'm talking and having conversations with folks, a lot of times people, they just automatically assume, hey, this is for retirement. Well, that's great, but having a goal in mind, saying, a lot of times some of the more affluent people that I deal with, they say, well, I have an account here and I have an account there and an account there. And pretty soon they got so many accounts, they're like, well, how does it work together? And as I'm having conversations, and say, well, I'd like to take a vacation, once a year and take all my kids and grandkids. And on average, it takes $20,000 to $30,000. Okay, great. Let's designate an account that's exactly what it's going to do is provide that income. Well, first, it's got to be big enough to sustain something like that. That's part of what I help with, and saying that account's too small, it will, eventually go completely dry. Or yes, that account can handle that type of distribution. But a lot of times it's setting a goal for an account. This account is going to be for, the trips. This account is going to be just for our regular expenses each and every month. And then this is going to be our fun money. I mean, how everybody's got their own, this is how we'd like to do it, but that helps having a goal in mind, because then it also helps with expectations. If you're saying, I need money to come out of that like clockwork, I'm not expecting it to double overnight either, because I don't want to take any risk. If I know I have a bill coming due tomorrow, I want to make sure that it's safe and secure and will provide me that income when I need it. But something that I don't need for 10 or 20 years down the road, we might say, well, let's take a little risk because we have time to make it back. And that's where people get into trouble in retirement, is if they have something invested and the stock, think 2 years ago when we were raising interest rates and the stock market fell and the bond market fell at the same time. And people are drawing money, say they're taking too much and retired too early because they wanted to. And that's when they get into trouble, is when the markets are down and they're drawing from what they thought was going to be future growth, and it affects their future distribution strategy. And so that's why having expectations, having goals, as silly as that might sound, it's one of those fundamental things that people overlook. Advisors overlook it. And so again, it's bringing it back to the basics as to, yes, there's different strategies that can be used, whether it's an annuity or you build your own personal pension or you set up distributions. Again, it doesn't matter whether or not you use a product or you don't use a product. It's about a strategy. And so many people overlook a strategy.
So much in that little, section there to pull apart. I mean, I know people have gotten burned because the market dropped, and you didn't even touch on the required minimum distributions and how that impacts, when stock markets go up and down. So there's definitely some more to dig in there, but that's going to get technical and very personal. So we'll leave that for another conversation. Maybe anyone has questions, they can get in touch with you one-on-one. But we started this conversation, you referenced your book. So let's talk a little bit more about your book before we have to end the show.
Sure.
So the title, I believe, is Living the Retirement Dream. I understand it's made up of questions you've received over the years, but maybe talk a little bit more about that. And I'm sure people can get on Amazon and all the other places that you can get books. But talk a little bit about that and share more.
So the book came along as far as, people asking these common questions. And what I did, or when I was trying to tell a story before compliance said, no, we can't do certain things, it was more of an educational type tool saying, like, here are scenarios to think about as far as, how they affect real life, how they affect, like these common questions like retiree mistakes or becoming a snowbird and moving away, like it sounds great saying, hey, we're going to move somewhere warm for 6 months of the year. But then, everybody in my scenario, like, what about Christmas? You move in October to get the favorable tax treatment, down in Florida or some other state, and you change your driver's license and, get that residency down there. But then you find out, I'm golfing, but my spouse isn't. Just worried about the grandkids back in, a northern state, and they're missing Christmas. They're missing, any of these holidays, Easter, and they're like, I'm going to go back early. You can stay in golf, but I'm going back for these things. And pretty soon you end up finding out that, what's really important to you in life. And again, it's not always money focused. Yes, money is a huge driving factor of that, but it also comes back down to what are your core beliefs and who are you as a person and family. And so it kind of runs through different scenarios of people. And then, there's a different scenario about taxes. And we talked about it on a very, I would say, low level of things for tax savings ideas. I also have a lot more detailed information regarding to, some strategies that people have used. Sometimes they sound great, but they cost a lot to put together, or they become so cumbersome that people like, it's so complicated, I don't want to do it anymore. How do I get back out of some of these ideas? So there's different things that you can pursue. And actually for, listeners, I do have another, a smaller tax booklet that, I'll be giving away as part of this podcast, for people that want to see that. But it's a separate book that just is about taxes and tax reduction strategies. But for this book, it's more about stories of actual clients and what they have seen happen and how do they overcome those types of things.
Yeah, and Jeremy, I think we shared that we will put everything in the show notes so that individuals can click on, links to the various information that you shared. But as we're kind of getting to the top of the hour, if you will, we'd like to ask all of our guests, this one question. So you can do anything you want. You choose to do this. What's your why? Why do you get up every day and you say, I want to help people with their retirement so that they can live the dream, as you say in your book? What's your why?
My why is, it started very early on. I don't know if it's just a Midwestern thing, my mom grew up on a dairy farm, and, everything that you had to do, you had to work for it. Right. And, very early in school, I mean, for as long as I can remember, I'd always get awards for, helping other kids and doing stuff, so it started very early. I don't know when or why. So, maybe it's just the background from my family, or maybe it's a Midwestern thing, but I've always enjoyed helping people. And throughout school, I knew that I was good with numbers. And so, this is one of those things, I thought, I also love to hunt and fish. So as I got into college, I thought I'm going to be in the DNR. And after I thought about it for a moment, I'm like, well, the DNR person is working when I want to be hunting or fishing. So that's not going to work. I enjoy my time too much. So I found something that I can control my own destiny, control my own time. But yet I'm still helping people that I really enjoy helping. And the numbers and helping people with retirement is really what I enjoy doing.
I love that. That's amazing. And I love how you brought it back to when you were a kid, and also your family and the way you were raised about just wanting to help people. And I just think that's wonderful. So, Joseph, do you want to bring us home?
Sure thing, Mary. So, Jeremy, talked about numbers. So what are your numbers? How should people get in touch with you? And, give us one way. We'll put all your contact info in the show notes, of course, but what's the preferred method?
Well, I mean, for local people, they can call me, on the phone number, but on my website, I do have a portal for people to reach out and contact me. So it's, pointwealthmanagement.com, and then, just click one of the tabs to contact, and they can fill out information, kind of what's on their mind. And so that way I set aside enough time to make sure that we have a meaningful conversation versus, hey, I can only give you 5 minutes of my time, well, nothing happens during that except for, hi.
Sounds good. Well, Jeremy, there's a lot in this conversation that still needs to be unpacked. So people who have questions should definitely get in touch with you. For those who are listening, thank you very much for your time and dedication to the Prime Life podcast. Mary, thanks for co-hosting with me once again. And tune in next week for another great episode of the Prime Life podcast. Thank you all.
Remember to subscribe to the Prime Life podcast anywhere you find podcasts. You can find all of our episodes, contact information, and more on our website, primelifepodcast.com. Stay connected with us. Follow us on LinkedIn, Instagram, Facebook, and TikTok.